Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I wanted to bring TLT to you. TLT is not an instrument that I trade very much, but it comes into rotation for me today because of what I found through a couple of scans and here in the 10-year yield. Right, so a few ways of looking at this. Given the duration you've chosen, we can look at the bonds and notes here in just a minute. But when I saw this TNX pattern, and I see that squeeze histogram moving from upper left to lower right, it sure looks to me like this squeeze is getting ready to fire short. Now, inside that, another kind of interesting thing here, and I know this is a lot of data, but if you enjoy studying the squeeze, this is a very helpful indicator. So it's showing us for however much data we have pulled, which in this case is 1 year of daily bars, we've had 6 squeezes. How many of those squeezes have fired long? 0, right? All 6 of them have fired short. The average squeeze length is 5 bars. Now this is just current counting the red dots, which is why it's showing you 3 instead of closer to about 13. But what I'm getting at is that this squeeze is a little long in the tooth, meaning it should get ready to fire very soon, and all of them have been bearish. So I think we can look for TNX to begin to fall. Inside that, if you would like to look for an opportunity to buy TLT, notice that I think that's finally something to look at because of its relationship to the 21 EMA. Right? If you've been working on this in months past, it's always tougher under that mean moving average. But today will be, about the 5th close above the 21 EMA, and I believe you're setting up for a move from about 88 to 90. Now that may not be thrilling for everybody. It's not everyone's cup of tea to trade this product, but I like the way we're moving in there. And then again, if we look at it through ZB, you'll notice that you've got that same relationship to the 21 EMA, a fresh daily squeeze, and so many of these products that are telling us all the same thing. And I think that we can start to look for rates to come down somewhere in the next couple of weeks, and these markets should help us predict that. So I like going out into the options about 60 days and looking at buying some Delta 70s, selling some puts to help offset that, I think is a complementary trade to it. If we close below the 21 EMA on a daily basis, I'll close that idea out and I will not force it. But if that pattern can be maintained, if the moving average can keep curling up, well, then I think you've got reason to look to this market again, and hopefully in a relatively directional way. So just some quick thoughts there on the debt markets. I hope you find that helpful if you are trading those. You'll have a great rest of your night, and hope to see you in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.